Hello, I'm Lotus Meets for Australia's Finance News Network, and joining me in Hong Kong is Eric Sprott, Chairman of Canadian-based asset manager Sprott Inc. Eric, welcome back to the show and great to speak with you here at Minds of Money. Now, we all know you're a big fan of precious metals. What do you believe are the biggest macro factors that will drive up their prices over the next 5 years?
Well, it's the sort of the same factors that have been operative for a long time. One is that I think there's a physical shortage of gold that's being supplied by the Western central banks surreptitiously. We now have the tailwinds of printing of money. We have the further tailwind of bank runs, and we may get one now as we see what's going on in Europe that we might experience another bank run. So those are the kind of key things that I watch right now.
So which of these global threats that you mention are most concerning to you?
Well, the biggest threat is that we have way too much debt versus the productive engine that has to take care of the debt. And we seem to believe that you solve debt problems by issuing more debt. You know, we're going to solve the Cyprus problem by giving them $17 billion of more debt. It's not going to solve any problem at all. The productive engine is not capable of servicing the debt.
Let's get to your outlook now for gold and silver. When we last spoke at the end of 2011, you predicted gold would be north of $2,000 by mid-2012, and it is yet to break through that barrier. How have you adjusted your forecasts since?
I have not changed my forecast. In fact, I think where's the price of gold going to go? It'll be in the thousands somewhere, the multi-thousands in my mind. As I say, we keep printing money. We have no economic growth. We have a banking crisis almost every week somewhere. And sooner or later, people will figure out that gold is something they should own.
But Eric, could you put a time frame on when we could expect the price of gold to break through that 2,000 barrier?
Well, you know, the gold's gone up, I think it's compounded at 16% a year for 12 years. I see no reason why it wouldn't continue to do that. And in fact, there's more reasons for it to do it, as we now have all developed countries printing money. You know, when you see Japan come in and say, we're going to cause inflation, you could never imagine when we started in this gold business that we had those kind of tailwinds behind us, but that's what people are doing. So I think it will pick up the speed of appreciation over time here.
So Eric, how does your outlook for the price of gold compare to your forecasts for the price of silver?
Well, as you know, I happen to believe that this is the decade for silver. And why do I say that? Because I see what people are doing with their money in terms of investing in silver. And silver used to trade at a 16-to-1 ratio to gold. It trades at a 55-to-1 ratio to gold. But I see lots of buying in the silver market vis-a-vis the gold market. Silver is a very, very small market. And I think the silver will triple the performance of gold this decade. And we're seeing part of it already. Of course, we did get up to $50 and then it faded again. But I think silver will reassert itself. And I'm an optimist for gold, but I think silver is the place to be.
Now turning to investments, and generally speaking, if investors want to get a piece of the action, they have the option of buying financial products linked to the metals, purchasing mining stocks or bullion. Eric, how much would you allocate to each asset class?
Well, I'm a great believer in the physical. That's the first thing. So I think everybody should have some physical metal. If you are young and you're into capital appreciation, which I think probably most of your viewers might be, I think right here at these levels, I think the stocks are way better value than the metals. I think, and typically they've outperformed the metals by at least 2 to 3 to 1. So if we're correct in our thesis that silver and gold are going to go higher here, the stocks are going to superbly outperform the metals. And you know, if they're risk tolerant, I think that's where they should put their money.
Now, as you mentioned stocks, we're here at Minds of Money in Hong Kong, dominated by a multitude of Australian mining companies. Have any caught your attention since we last spoke?
There's lots of interesting companies in Australia, and we watch them very closely.
When we last spoke, you did highlight Ramelius Resources, Silver Lake Resources, Goldfields and South Boulder Mines. How has your exposure changed to them since?
Well, probably in all of them we have a lesser interest, maybe less so with Silver Lake. I mean, it's been by far the better of those three. And South Boulder was still a big shareholder. Ramelius were still a big shareholder. They've both been very negatively affected by this sort of decline in all small resource stocks, but we still would have a serious holding, but not nearly as much as we had before, because most natural resource and particularly precious metal funds have had redemptions. So you're forced to sell things whether you think they're wonderful or not.
And have any new entrants entered your hot picks in the precious metals segment?
Not really. What I'm focusing on now is try to find producers or near producers that are massively undervalued by the market who can pay a big dividend. And so far my focus has been in North America, but we're always open to the opportunity of finding the same situation in Australia. We're a near mine producer. If they decide not to build the next mine, could pay a very significant dividend, because I think in this zero interest rate world, that's the key to moving these mining stocks.
So finally, Eric, for the investor wishing to preserve and grow their wealth, what's your number one piece of advice?
Well, I can tell you that I don't think they should own bonds. I don't think they should own stocks, and I think they should own anything precious metal oriented whatsoever. That's where they should be.
Eric Sprott, thank you so much for joining us in Hong Kong and for your outlook and insights today.
Zelda, my pleasure.